Most experts, and you all engage in hedging, but my personal preference is not to hedge. This is because hedging comes from a lack of confidence. That can happen because if you are confident in that area, you should go all in. So, in 2021, when I went all in, I bought dollars. When the exchange rate was 109.1, using the money from selling my apartment. I don't show my face, but I do disclose my accounts.
Is it because you have money that you don't reveal yourself?
Still, how great would that be? I believe that 3,300 is the peak proportion of the working age population in our country in 2021. So, I had the thought that both real estate and stocks were at their peak. And I entered right before 3,300. I told Mike to give me only 10% of the profit from the 920 million apartment, which is 92 million won. So at that time, I disclosed my accounts and broadcasted live with 4 accounts. At one point, I earned over 100 million, more than 100%. But in the end, I just junked the rebound. I didn't expect the rebound to last this long. Profit was about 35% when I exited. It then increased to around 40%. Then, at that time, I bought 10% in dollars. The downside was that I initially bought it for $78,000. I increased it to $540,000 later on, and I organized everything on June 1st to write this book. At that time, I realized I had earned about $7,600. So, after selling the apartment, it dropped by 600 million and then rebounded by 400 million. However, it is still down by 200 million. Therefore, I apologize to the person who bought the apartment from me, but they are facing a loss of about 200 million. And if they took out a loan of around 920 million, they would have been paying 100 million in interest over the past 3 years. I did not pay any interest. So, I consider myself to be in a fortunate case on both sides. However, the reason I thought that way is that I want to show you this chart. First of all, while I was broadcasting on YouTube, I created a huge bromide using 300 years of data from the United States, and it's a massive bromide that would look incredible hanging on the wall. What kind of data is this? This is Dow. This is the reality. This is the Great Depression. It's 386.10, right? September 1929. This date is today. Oh, really? September 3rd. Yesterday was a holiday in the US. It was Labor Day. Other countries all celebrate May Day on May 1st, but the US only observes it on the first Monday of September. So, there isn't a specific date set. It's the day of the week that is determined, but it just happens to be Monday. Looking at the data from the Great Depression, I don't have it with me right now, but in the 1920s, the United States had Saturday markets. So even if it's a holiday, one slot is empty, but that day happens to be the 2nd of January. So, on September 3rd, it hit 386.10 and then plummeted by 89% over the next 3 years. Coincidentally, that was today. So I thought I could go in and set it up, since I can access the version early and I showed you my accounts.
I just checked my accounts.
And that's why when I come to the investment club, I keep discussing the steps. I need to short the market in the US. And if I get it right even a little, it could be a huge success. But if I'm wrong, I can just make a small adjustment. However, I want to verify this data, so I told the members that today is D-Day. I posted about it 4 days ago, labeling it D4. Today is the day. So I suggested we dip our toes in. I believe that this time, the Kospi will break below 2,000. Right.
It's not just that 2,500 will break, 2,000 will also break, and the bottom is quite harsh, so I can't talk about it right now. However, many economic experts and stock investors are saying that South Korean stocks are undervalued.
When it was at 3,300, I thought it would go to 4,000, so I entered a long position. Of course, now I have reorganized my position and am entering a bit again. But what I want to show you on this chart is this. This is the Western military 1,000-year wave. The actual data has been written here since 1,000 years before the medieval Dark Ages. All the data is available. Since when can we create data from any country that goes back 1,000 years? Since 1264. This is the inflation index of the UK. This is because it is the same as stock prices. Since 1700, it has actually been a stark rise in the UK. Then, starting from American independence, we have the US stock index, and later, the world index. If we look at this through Elliott wave theory, we can identify the first wave, second wave, third wave, fourth wave, and fifth wave. During the Great Depression, we see the first wave and second wave, or rather, the first wave. And second wave correspond to the time of the Civil War. This is when America gained its independence. If it's this year, or next year, it doesn't matter for 2 or 3 years, as it's a millennium, so 2 or 3 years are insignificant. If this peaks, there will be nothing left in the stock market or anywhere else in the world. Because of this risk, even if it is only a 0.01% chance, we need to prepare for it. If you are excessively exposed to leverage, you will simply be out. Now, if we expand on this a bit, this represents a 300-year wave. As mentioned earlier, this was during the time of the American Revolutionary War and the Civil War. This is the first wave, second wave, third wave, fourth wave, and fifth wave of the Great Depression. If we zoom in on this part a bit, let's take a closer look. When we zoom in, this goes back to the year 1900. This is a 120-year wave. This is the Great Depression, wave 1. Wave 2, this is during the oil shock in 1974. Next, this is during the dot-com bubble in 2000, and this is during the Lehman crisis in 2000, if we consider it in terms of waves. Whether this year, next year, or the year after. When considering a time frame of 100 or 200 years, 2 or 3 years are not significant. This could take a long time, or it could happen next year, which is why we need to be cautious. Since 1900, starting from the Japanese colonial period and the Incheon Misujinso, this is also a bromide. This is all actual data. From the time of President Park Chung-hee's 5/16 coup, this is all related to rice prices and the Incheon Misujinso, which is actually our country's stock market. If we create a graph considering this, looking from 1900, the first wave occurred in 1920 with the Migong Ryeol, which was the catalyst for the March 1st movement. The price of rice skyrocketed, and just like now, if rice prices go up, we couldn't afford to buy pizza. We would all starve. Due to the Spanish flu, 190,000 people died on the street. So, that's when the riots occurred. This was during the first wave, and after the second wave ended, liberation took place. On March 3rd, 1956, the Korea Securities Exchange opened in Myeongdong during a suspended state. From this point on, if we count the waves, this Kospi is like the chosen star crisis. Since I was 17, there have been 300 years of waves starting from Yongjong Road, and I think those people might seem a bit humorous. If we trace this back to 1956, it coincides with President Park Chung-hee's 5/16 coup, the first wave, second wave, and when I first participated in January 1949, that was the third wave, followed by the IMT as the fourth wave. I believe the fifth wave ended at 3,300. Looking at it this way, let's zoom in a bit. This has all been calculated using functions. Did I sell my apartment for no reason and short the market at 33.16? From here to there, the short position made over 100% profit, but I misjudged this rebound and ended up with a profit of around 30% before exiting. At that time, I entered again. What I mean is that since it was 33.16, the Kospi hit a constant in June, and in October, the Seoul apartment also hit a constant. This is wave A and wave B. The ABC relationship is somewhat suppressed, but then, I consider this as wave 1, and this is not a corrective wave, but rather a rebound wave for the Seoul apartment, just like this is also a rebound wave. The accounts are almost the same. However, since this has been going on for such a long time, 1 year, 2 years, 3 years, people might mistake this for a bullish wave. But if this is not a bullish wave, but a corrective rebound wave, then this is wave A and wave B, and it seems like A, B, C, meaning that the C of the Seoul apartment is ending, just like that. Is the chart the same now? How many months apart is it? But if this C wave appears here, it's called a killer C wave. If you look at the IMF period, this is the C wave. This is an irregular wave, consisting of A wave, B wave, and C wave. The C wave occurs after the late phase, like during the IMF period. This means the last wave has ended. The yellow part has finished. This is the last wave, and after the corrective wave ends, it would be good to see 1, 2, 3, 4, 5, but think about it. This period of decline is about 1.5 times longer, and it couldn't surpass half of that a bit late. This weak slope is not an upward trend, but a rebound.
The US stock market has risen a lot, but the Korean stock market has not risen in comparison.
It's because the waves are different. The US was in a bullish wave, while we were in a rebound wave. The waves in the global stock market are all different. That topic came up, and I will summarize and show it to you later, when we discuss the peak in October 2021. Whether it's Busan, Daegu, Jeonnam, Seoul, or Incheon, they all hit the peak. During the 34-year upward trend that started in 1987, there were times when the provinces rose while Seoul declined. This is because the waves are different. However, this time, all 5 waves have ended together. If that's the case, it's going to break down this time. And the problem is that places like Daegu and Busan are currently breaking down tremendously. I see this very seriously. In the case of Busan and Daegu, I'm sorry to say that the decline has just begun. It's surprising, right? I will show you the evidence later. Anyway, I also broadcast daily in the stock market, do closing broadcasts, and run an investment club with members, but I mainly focus on shorting because this is a rebound phase. If you get caught in a wrong position and can't sell, it's okay to be stuck in a short position during a major downtrend, but if you get caught long in a major downtrend, you won't be able to get out. It's like getting stuck in a short position during a major bull market. So, if we summarize it again in terms of long-term waves, the data moves very slowly. This is because the graph is extremely large.
This is really big.
This is actual data.
The act of creating it is fascinating.
I have yet to see anyone in our country who possesses the 120 years of Dow Jones data, including 1 data point and 15 trillion points, especially the trading volume. Even if there is data, it may only consist of closing prices or short data. The original data is included in the L chart. This may seem a bit speculative, but when looking at the Western Millennium Wave, it appears that around 2024, specifically in the next 2 to 3 years, the rise of this entire millennium could come to an end. So, even though the chance is only 0.01%, don't expose yourself to excessive risk, as Thailand, which our grandfather never experienced, could still come. In any case, whether it's the 1,000-year wave, the 300-year wave, or the 100-year wave, the issues we see in our country's 100-year wave and the 60-year wave are not problems that pertain solely to the stock market. So, when the stock market collapses, what happens next? There are people who have used their stock apartments as collateral to invest in coins, businesses, or stocks. When one thing fails, it leads to a domino effect. This is because there are 3,000 apartments, and the market price of those apartments can plummet due to the cash sales triggered by 1 or 2 individuals who are overly leveraged, which in turn drags down the entire apartment market.
Who would have thought the market would change like this? The market suddenly shifts, and the news keeps coming in waves, and then the media suddenly reports a crash. Who could have predicted such a crash in the second half of 2022? Truly, no one knew. And while our friend Elliott talks about this, there is no such thing as 100% certainty in the world. So could it be that Elliott is also considering the possibility of such risks, and is now entering some assets like dollars or inverses as a risk hedging measure?
Yes, the dollar has been flowing out since June, and all notifications have been made. There are also people who are following along. I couldn't sell at the highest price, but still, the amount was significant, and my perspective has changed a bit now. The 1 to dollar exchange rate is now at a lower point, and people have said, you sold, so do you see it as a lower point? It's not that simple.
I sold because it looks like it's going down. Before that, I was looking at going long, but isn't it true that the dollar has always risen during a crisis?
That's right, but I think we need to break away from that paradigm. The stock prices have risen a lot over the past 2 years, and the exchange rate has also increased significantly. It's the opposite of what should happen. The exchange rate should be falling, yet both stock prices and the exchange rate have risen together. I believe that this time, we might see a phase where both the exchange rates and stock prices decline simultaneously, which has never happened before. The reason is that the recent rise in the dollar and the exchange rate is due to our low foreign reserves or some internal issues, not just in Southeast Asia or our country, but because the dollar index has risen, causing neighboring countries to rise as well. So now, when stock prices go up, people think the dollar will fall, but that's not the case. They went long on the dollar and long on the exchange rate, and then on June 1st, they all liquidated their positions. When they asked why they sold, the exchange rate dropped by about 60 to 71, which means losing 500,000 won for every 10 won drop. Since I had $540,000, that was because all the money from selling the apartment was there, and I had some spare funds. However, I always tell my members that my outlook and my accounts are separate. My outlook is bullish, but if the market goes the opposite way and my accounts are in the negative, I need to cut my losses and exit. People might wonder where that analysis comes from, but it's about discussing risks and avoiding them. Just because my outlook is this way, I can't stubbornly hold on if my accounts are going the other way. I believe that at any time, even if today is the day of the Great Depression and both the US and our market drop together, I would still exit with about a 6% approval rate, coming out at break even. I have been thoroughly managing risks for 3 years, and I have never shown my members an account that has dropped more than 5%. I showed a lot of what I ate, but the members say things like, why don't you give it when you've made about 5%? Why do you wait until it goes back to break even? I refer to that as a trailing stop. When I've made about 30%, I set a trailing stop at around 23%. If it drops, I will erase it here. But when it reaches 100%, I couldn't protect the members because when it hit 100%, 70% was the stop, and I held onto it until it broke 50%. That was my mistake, and I showed you the 6% swing or something like that. If it turns around, I will delete it and exit. So why would I foolishly erase it when I could make about 70 to 80 million won now? That's my principle. Therefore, you need to manage risks well.
I make some predictions and place bets based on them, but if my expectations are wrong, it automatically triggers a response.
That's right, in an automatic manner. This is a strict rule. From 2010 to 2013, I set the bottom of Seoul apartments at 100. This bar chart represents the national apartments. ABC is going up. The data has been updated until this morning. The one at the very top is the star map has 120 locations, and the top 100 in Chicago are strong. Information surpassed expectations. Next, the purple represents the Seoul apartments. It dropped by about 60%, around 50% to 60%, and then it rebounded close to about 60%. So, what this means is There are 8 areas referred to as blue zones, like Nodogwan and Gumgangu, where apartments priced below 700 million won tend to experience sharp declines and rebounds. However, this one has continued to drop. Now it has rebounded, and the pink one refers to a metropolitan city. A metropolitan city, they say that the metropolitan city keeps declining. This is a complex of 1,170 units. This area is a combination of the metropolitan city and the surrounding region. When we consider the country, we distinguish the metropolitan area and the provinces. The metropolitan area includes Gyeonggi, Incheon, and Seoul, while the provinces include the metropolitan cities and other regions. The waves are all different, but this last wave is the same. When they were manipulating the market, the Seoul apartments were on an upward trend. Then, when the Seoul apartments crashed, the red Seoul apartments were plummeting while the regional apartments skyrocketed. This was during the time of the 4 Major Rivers project and the new cities, where apartments in those areas rose significantly. If you look at the long-term charts, the waves are completely different. So the risky part is that this is a real transaction price map created from 5,050 apartment complexes, nationwide since 1987. However, if you look here, once it surpasses P1 and P2, it aligns perfectly, right? It acts as support. It hasn't broken yet. So this is Seoul. Seoul is really high, right? It doesn't drop much when it falls, but it rebounds significantly when it rises. So if Seoul has risen this much, while the rest of the country hasn't reached that level, it means there must be something that has gone down. This is exactly it.
Metropolitan city.
If we expand the metropolitan city, it looks like this. It has broken out. It has broken out. Earlier, it was a straight line here because it's a logarithmic chart. This is a first-degree function. However, when it becomes a cubic chart, it changes to an exponential function. Since you majored in mathematics, you probably understand this concept well. It is an exponential function. Now, it has turned here, and what this means is the special mortgage loan. I believe that the forces aware of this have used the special mortgage loan to manipulate the situation. However, it has dropped. The apartment market went up and then fell, but it couldn't make a second rebound, and then it just flowed down. Of course, there is an arithmetic support line here, but I don't find it very reliable. The problem is that this could happen. Now compare this with that. I think this is terrible. The metropolitan city or the blueprint. Especially in the case of metropolitan cities. If you look at the metropolitan city here, it's really astonishing that this was in September. It's September 2019. Right before the last COVID wave, when it seemed like everyone knew that this support line was being supported, it just completely broke out here towards Busan. Then a surge occurred. I believe the after effects are happening now. It shouldn't have risen like this here. So I see this as the final peak operation. It's about how some forces, perhaps to make a final profit, are using a fishing rod to lure in ignorant investors or actual players in the metropolitan area who are blindly following and buying. However, these people cannot sell. This is important. And another important point is that when we look at this all at once, Seoul apartments are above this support line, while nationwide apartments are close to it, and the metropolitan areas have broken through. Ultimately, what I believe is that when this vehicle comes for Seoul apartments, the entire nation will decline. This is the risk. Next, this is what we saw earlier as the first wave, and this is considered the second wave over 34 years. If we zoom in on this part, you can see a line here from the time of Rotae-woo in 1991. Shall we zoom in here? If we look at it this way, we can see that there is a resistance line when we consider points A, B, and C. If you shift that a little parallel to the low point in 1994, it almost comes out in November 1998. It's amazing. Next, during President Lee Myung-bak's term, if you connect this peak and then shift it parallel, you can connect the lowest point here. And if you continue based on the closing price, it leads to the time of President Park Geun-hye's inauguration. So, a similar slope is currently appearing. It is connected to the closing price in August. If August goes up further, it will become a bit more gradual. Then, if we translate this parallelly, it will connect to the lowest point. If the A wave and B wave end here, and the killer C wave begins, it will unfold like this. And I wrote deformation in my book, Creative Destruction. To start something new, you have to break the existing trends. This happened at that time. What did not break in the 80s? What did not break in the 70s and 60s? Finally broke in 1982, and after hitting the bottom in 1987, a major upward trend began. I believe this will break this time. It has to, after 15 years. This is 15 years, you see. As we saw earlier, there are astonishing things that happened in 15 years. It's as if someone is measuring with a ruler. So this time, the decline in the market isn't just a temporary dip, followed by a rebound. It's going to break down further, breaking down and going down, eventually, somewhere here. In 2028, this is, until 2026. So if it goes this far, if it sticks around here, it roughly means something like this above. I hope you can take a look at these things. Next, regarding my actual transaction prices, this is a monthly chart by region across the country since the COVID-19 outbreak in 2020. It's nominal. If you look here, the prices of apartments in Seoul have risen significantly. Of course, that still reflects a decline of about 60%. In the case of the star map, it has exceeded the reference point, especially in areas like Seocho-gu. But look at the metropolitan areas and local regions, particularly the metropolitan cities. The star map has exceeded the reference point. However, in the case of Nodogang Blue Zone, the response has now come for properties under 700 million in 8 districts. But look at this rate of increase. It has risen tremendously. Another point is regarding the 25 districts of Seoul. Here are the Seoul apartments. As we saw earlier, the top 100 in the statistics have surpassed their previous highs. Of course, considering inflation, this is where we are. Gangnam has also surpassed its previous high, but it hasn't increased significantly since COVID-19. Seocho has risen dramatically. It has reached its previous high. Songpa has rebounded by about 65% to nearly 70%, and Gangdong has also rebounded by about 50%. Gangdong has surpassed its previous high in a few complexes, and now Nowon is starting to rebound, but look at the rise in Nowon at the end. So when we talk about Seoul apartments, we need to discuss the entire Seoul area. We shouldn't just talk about Gangnam and Seocho as if there's a major upward trend. Next is the Case-Shiller Index. This index has been around since 1880. If you look at the chart, it has risen dramatically. It is at an all-time high. However, if we adjust this to the US CPI, there is a peak from the Lehman crisis that we couldn't surpass. What this phenomenon indicates is that in 2021, Vice Prime Minister Hong Nam-ki is in a situation as dangerous as it was in 2008. According to the Korea Real Estate Agency, it has surpassed the previous peak, but it did not exceed the peak during the 2008 Lehman crisis, and that's how it fell. This phenomenon is appearing in the United States. We shouldn't be too happy. They are struggling. If they end up falling back from here, it could lead to serious problems. Globally, you need to take a look at this. And also, Representative Kim Ki-hyun mentions that the current situation is very similar to 2009. If I analyze this, technically, since this is nationwide, I will skip that part, and this is one data point. Everything has been done using one data point since 2006. This is 2009. If you look closely, most of them hit constants around 2021, but at that time, the peaks are all different. There is a difference of about 2 years. If you look closely at this part, this is the peak of the market capitalization of the top 50 apartments, and the blue line represents the Yongun Ojok Index. But if you look, when the Bubble 7 collapsed, the Nodogang area skyrocketed. Right. That's correct. So, the peak occurs here once, here once, here once, and here once. So, after the Lehman crisis in 2009, there was a simultaneous surge in 25 countries. This peak here is the highest. There was a brief rebound here. But if you look at this now, see this. The 3 districts of Gangnam declared a bubble at the end of 2006. Bubble 7 burst. At that time, while there was a crash, the 3 regions of Nodogang skyrocketed. So, the peak comes out like this. And then some people go up, while others go down. Here too, some are falling and some are rising. But at that time, everyone was rising. The difference from now is that currently, as the Nodogang area is declining, some areas in Gangnam are rising. So, this is the situation. Some are falling and some are rising. The reason I believe the peak in the late 2000s is different from now is that originally it would have been the same, but many people conducted research at that time.
It was during the COVID period in 2020 and 2021. Then, they didn't provide loans for high-priced apartments over 1.5 billion. As a result, there is a rigidity in the second half because there is no urgency among people. Therefore, I believe that the trends observed just before the financial crisis in the 2000s and the recent trends are different. If apartments worth over 1.5 billion were provided during the COVID period.
Hearing that right now, I can show you another point that might surprise CEO Kim. This goes back to 2008. And 2009. Now, if we look at this, most of the increases occurred around October 2021, and only Gangnam and Seocho saw further rises after that. Nevertheless, the peak is indicated here. This is because most people find the peak here, and indeed, this is the peak for Seoul. But this time, Seocho and Gangnam are breaking through the checkpoints. This is the data. I updated it this morning. Fields like labor studies and health studies continue to decline. So, the Seoul apartments are located in the light green area. This is all there is to it. So, in 2009 it reached this point, but actually, this is even higher. But this time, it's a selective rise. This is one tip, and another point is that only the market that didn't provide loans over 1.5 billion is currently going up, right? I was surprised to hear about the 1.5 billion. Just earlier, I was on a broadcast talking about the special insurance mortgage loan. That's the culprit, you know. It's the government that raised it. If you look at this, there is household debt in the submissions made by the Bank of Korea to the Statistics Korea, and the household debt consists of mortgage loans and unsecured personal loans. Most meal loans are based on creditor. As of today, I saw the news that came out yesterday regarding this. Yes. This is the largest ever. I just captured this a moment ago, dated September 2nd. If you look here, there's something amazing. As of today, household loans amount to 1,277 trillion won. Among this, mortgage loans are 826 trillion won, and the rest are other loans, including credit loans. It's 443 trillion won, and if you look at this, we usually say that the rise and fall of apartment prices are determined by mortgage loans. That's not true at all. Not true at all. Not true. Look at this. As the apartment prices rise, the mortgage loans increase. Naturally, they go up. However, it is clear that the apartment prices plummeted starting from the end of 2022. There have been fluctuations, right? The housing mortgage loans keep increasing, and even now, there have been 2 rebounds this year and last year. Mortgage loans are increasing. Ultimately, what this means is that mortgage loans can increase at any time. Therefore, there is no correlation coefficient. A correlation coefficient exists only when the directions are the same, but they are going in opposite directions, right? However, what we have here is this. It's the same. What is this? This is an apartment in Seoul. This represents the total loans, household loans, total loans. There are mortgage loans and credit loans. However, as we just saw, mortgage loans did not affect the inflection point, but the rest did have an impact. This is about credit loans.
So what the chart indicates is that people have not only taken out home equity loans, but also personal loans to buy houses.
That's what you mentioned earlier. Why does it drop into a non-working state while climbing Gunhang Seochon? It's the same thing we just talked about. I will show you that in a graph. So, let me show you this. This is about housing loans, credit.
Credits.
What this is about is the blue zone, which includes 8 countries with populations under 700 million. People have been quite active there, right? However, recently, for the first time this month, the number of loan applications has increased after continuously decreasing until now. In August, we see that the slope has weakened a bit. This is because interest rates suddenly rose, leading people to sell their apartments to pay off loans at rates like 6%, 7%, and 10%. But now, while they are still paying off their debts, new loans are also increasing. In August, although they are paying off existing loans, new loans have increased even more, resulting in a positive net outcome. Now, if we summarize this, it's surprising that the fluctuations in apartment prices, whether rising or falling, are largely influenced by the overall loans, which are represented in pink. A significant portion of the total loans is not related to the changes in household loans, as credit loans are decreasing while mortgage loans are increasing. Therefore, the total loans will decrease. But how can credit loans be this large? So that means a lot of research has been done, and it's really crazy. The labor probability is still continuously dropping to a low point. Then, here, this is the part where, after this, you can see that the housing mortgage loans are increasing even more, and the slope has become steeper. In this part, 70–80% of it is government policy financing. People are struggling to pay back because they don't have money. But the government has been continuously promoting policies to encourage home buying. But the problem is that while credit loans have decreased, the government has injected so much money that it has created urgency, causing the overall amount to increase. Therefore, these graphs match exactly.
So, not only household loans, but also credit loans combined show that the rise and fall of businesses in this region, which has been extensively researched, are quite similar.
That's right. The Gangnam Sochon area, which had over 1.5 billion in loans without borrowing, has seen less decline, but has urgently broken through the information barrier, while the Nodagang area, which engaged in a lot of speculation, is still stuck.
But I find it so surprising when I look at this chart. How can people buy a house by taking out a credit loan?
Looking at this curve, it shows how much credit loans are involved, including insurance company policy loans and credit lines. They are all essentially the same. However, the scale is usually not small. As of today, it's 820 to 430. That's over half. We usually think that the third house will be mostly residential. This has also decreased significantly now. It's at 34%.
60.
So I can somewhat envision that such after effects will appear after 2 or 3 years, which is a bit unfortunate. That's right.
I believe that there will be many more auctions in the future. Once the real decline wave begins, we will analyze the real estate market using the same data and charts, but also with the expertise and long-term data from someone who has worked in the securities industry for a long time. The judgment will be made by our viewers, but so far you have been quite accurate. You bought a house in 2021, used that to purchase dollars, and also invested in inverse assets, thereby increasing your wealth. Up to this point, you have been correct. And now you claim that a second wave will come. You have also written a second book, and I think it would be good for those interested to buy and read it. I have repeatedly mentioned that the time has come for everyone, including myself, to enter the realm of truth. Perhaps by the end of 2025, it will become clear whose words are correct. Elliott, it was a very enlightening time talking with you today, and I think it would be great if you could join us on our Richgo YouTube channel more often in the future. Thank you. Lastly, please share a heartfelt message with our viewers.
Those who own one property for actual use may not face significant issues, but there are likely individuals who own 2 or 3 properties or have high leverage on even one property. I have been saying that after my book is published, prices will rise for another 2 to 3 months. This is more about risk management rather than a time to enter the market anew. My book had many errors in the first edition, but I have significantly improved and updated it, especially by incorporating a lot of content while creating the L chart in this book. If you purchase the book, you can use L chart for free for a month. So I encourage many of you to buy it. The book contains detailed information about topics that I couldn't cover here, so I hope you take a look. I have gained a lot of insights from CEO Kim Ki-hyun of Richgo, and I want to mention that the background of L chart's creation was also influenced by Richgo. I ask you all to manage risks well while growing your assets, and I hope we can achieve a win-win situation together. With that, I will conclude today's session.
That concludes today's content. I would like to thank our dear Elliott once again for joining us. Thank you.
Thank you.